Hello, my name is Kent Browne, owner and broker of record for LePage Team Realty, and I'm sitting here with
York Polk from Mortgage Alliance Canada, a mortgage broker, and I've been doing business with Kent for 40 years.
And it's, well, maybe not quite 40, I'm not aging myself yet, York, but we've been doing business for a long, long time. It's great to sit here with York because the mortgage rules have been changing. What happened a year ago, York, on November 30th?
On November 30th, OFC, the governing body of mortgages and lenders, came out with a stress test for mortgages that people were buying properties with less than 20% down. So they were high ratio mortgages, and they came out with a stress test for any term of mortgage. Then the stress test said that if you qualified at a higher rate, which was 4.64, then you qualified to get a mortgage, even though you were getting a mortgage at the contract rate at that time, which was 2.3% at that time.
So York, you mentioned that only applied to high ratio mortgages, and I understand something new is coming in January of this year, pretty quickly.
Yeah, something is new coming. What OFC has come out with now is that they want to put a stress test on mortgages where people have more than 20% down, which we used to call conventional mortgages. And those people used to get mortgages at the contract rate. So what the government has decided now is that they're going to put a stress test on that. And the stress test will be the greater of 2% higher than the contract rate or the Bank of Canada rate, which is right now 4.99%. So people will have to, again, be qualified at a higher rate, even though their contract rate and their mortgage rate will be lower.
So just to be clear, it is going to be a little more difficult to be qualified, even though you have more than 20% down.
Yes, it will be. But there are some ways right now that you can actually get around this.
Well, I think we're all anxious to hear. What would you have to do to get around that?
Well, number one, it says that it's 2% higher than the contract rate. And if you take a 2-year mortgage right now, the interest rate is 2.5%, the contract rate would mean it's 4.5%. So it would be a lower rate to qualify at. And the other part of this is that they haven't changed the fact that conventional mortgages can be 30-year amortization. And by stretching the mortgage out to 30-year amortization, you can basically almost beat the fact that they're qualifying you at the higher test rate.
So one of the secrets here, I think, is to make sure you go to a great mortgage professional to get all this good advice.
Yes, sir, it certainly is. Call me anytime.
Now, is there any, you mentioned there might be a little bit of a silver lining for somebody who could, what could they do right now to beat this extra stress test?
Well, if I was going to buy a property and I was going to buy with 20% or more down, I'd go and buy the property right now. Because right now, if we have a signed agreement that's closing before January the 1st, it goes at the old rules or the contract rate.
There's another client calling York. Just to be clear then, York, what happens if somebody buys a house in December, but it doesn't close until February? Are they covered under the current rules, or do they have to apply with the new rules?
We're told, and we don't have it in writing yet, we're told that they're covered under the old rules. The only issue there is that if they change the agreement for any reason, if they change the amount of money they're putting down, or they want less money down, then they'll go at the new rules starting January the 1st.
York, I appreciate your time today. Again, York Polk with Mortgage Alliance, Kent Browne with LePage Team Realty, buying a house, financing a house, we're here to work with you. Have a great day.